Okay, so what kind of situation do we have at the moment on USD ZAR? Now, from a weekly perspective, what do we have? We have a market that has created basically this very overextended basically impulse to the upside. And from here, what do we expect? We expect the market to make a deeper retracement, specifically after this double top. Now, the market, what has created with the last candle? It has created with the previous candle, basically. What it has created this formation here. Now, when you have a candle that looks like this, I spoke about it also basically in a YouTube video, you want to see the market fill in the wick, at least most of it. And in fact, that is what you see the market doing. It has already filled more than 50% of the wick. Now, we can expect the market to go lower. This would be the first target to the downside. Why? Because if you want to measure a possible retracement on this pair, if we take our Fibonacci from the low to the high of the impulse, what we can see? We can see that the 0.32 Fibonacci retracement is at this level here, and we can expect the market to go and hit it. Now, from a daily perspective, what kind of situation we have? Now, on the daily time frame, we can see that the market has created this impulse followed by a correction to the previous support here, now to resistance, or to the very strong supply zone that basically this red candle has created. And from here, we can expect the next impulse to the upside to start after the market has created this double top. Now, if we want to measure this retracement from a daily perspective, we just have to take our Fibonacci from the high to the low, and what we can see is that the market has first basically hit the 78.6, and now the market is rejecting the 61.8. So basically moving by steps, which is something that is very good when you see the market doing. So basically, if you see the market that after an impulse goes for a test of the 78.6, then the 61.8, then possibly 50%, and then the meltdown to the downside starts. This is basically what usually happens. So we want to see the market make this move down. Now, from a 4-hour perspective, what kind of situation we have? Now, on the 4 hours, we do have support at this region. Therefore, we can't be looking for the short yet. We have to wait because the market is still in a bullish, it has still bullish structure from a 4-hour perspective. Now, if we go and see what is the situation from a COT perspective, so what hedge funds are doing at the moment on the US dollar index, let's see what kind of situation we get. So let's get our COT data, go to our US dollar index data, and what we can see that with the last report, finally they started to add some proper shorts, and net positions are still increasing. Okay, that is clear. We went from 7k, we're now at 16k, so still increasing. US dollar is still quite strong. However, the ZAR should get strong as well, making it possible basically for a USD ZAR to make the move to the downside that we want to see. Now, this is how we will be approaching a USD ZAR at the moment. Now, as we have just said, from a 4-hour perspective, the market is not ready to be it's not ready to show us one of our valid entries because it's still in a bullish structure. So what we will be doing with students, we will be waiting for the market to shift from a bullish market to a bearish market, and then we will be waiting for the market to provide to us one of our valid entries for this move to the downside. If the market will provide to us one of our valid entries, then we will be taking this short with a good risk to reward and good probabilities for a nice move to the downside and completion of this impulse correction and impulse pattern to the downside. Now, if you enjoyed this free analysis and education, make sure to drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.